presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last few years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one and a safe one. Appreciate it, man.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have had a fantastic day, a fantastic week. Oh, yeah. We're about to be wrapping this whole thing up, which is very nice. Gonna have a nice weekend, TGIF, as Tom used to say. Taking a look right now. Oh, with a tight neck for some reason. Look at the SPY. You're up 0.65%. Man, I mean, just look at the price action. I mean, this is the indices, man. This isn't just some random, stock that sells off on bad earnings. I mean, this is, yes, the SPY. My gosh. Insane. Complete parabolic movement to the upside. We were getting very, very near some of these kind of strange patterns, really, that we saw in January, which, if you recall, we were talking about that. It seemed very toppy, without a doubt. And, well, you can see what happened afterwards, of course. I mean, again, keep in mind, this was all occurring, obviously, with some capacity with the tariffs and everything. The actual tariff news, again, is this massive kind of drop down here in this area, right? So it is interesting to me that we are getting back up to these levels. I still thought these things were toppy. I am concerned we are a little bit toppy as well. But listen, there's some kind of interesting developments, right? A huge slew of deals for everything. Again, right back with AI and tech. Again, this just rings as 2022. Again, to me, with that kind of behavior. You can't argue against it, right? The earnings are there. And these companies are positioned very well, cash-wise. It seems like there's still a demand. We build out things with the Gulf Arabs, and you have NVIDIA opening up a place in Shanghai, which, there's movement here, okay? I still think there is somewhat of a risk in some capacity, big tariffs. Anything could happen at any time, but this is an interesting reaction. Again, I think the fear of a very hard recession is kind of at least gone out of people's minds right now. The data we've been receiving, of course, has been skewed in every way by the fear of tariffs. One of the things that I think is positive is, of course, we were looking at some of the shipping routes and how a lot of the ports, especially on the West Coast, were basically empty. You had a lot of kind of moored ships out in China. The shipping containers, the amount of ships coming to and from those ports is steadily increasing again. So that is, of course, good. It does seem, at least for a lot of things, that companies basically ate any kind of increase into their margins. Of course, that won't be the case for everything. We have Walmart. Of course, they come out and say, hey, we're going to have to raise some of our prices. You haven't really seen the price increase from tariffs yet. So, of course, that could be some kind of destabilizing catalyst. But, do we have a playthrough, again, of everything that happened? Like, okay, you know what? Never mind tariffs on everyone. Of course, you still have to deal with Japan and Europe, which, of course, can cause some kind of instability, for sure. Definitely with Japan, if we do things that they perceive will cause inflation for them, of course, they will, increase the interest rates, and that can be very bad for liquidity in the U.S. to some extent. So I'd be watching that kind of stuff. Europe itself, I don't know. I really, Japan's kind of more the big thing. I was reading a really interesting report on what Europe is seeking to do. It was annoying in some capacity. This is talking about building out their military capabilities in a sense to kind of decouple from the U.S. in some capacity. they are focusing, they've tried to do this multiple times. By multiple times, I mean 2 times. They have tried to really establish a pretty competent European Union army, right? So it's a little bit different than, Germany's army or France's army or whatever, but actually like a European Union army. And it really became just this, both times it became this large, just kind of bureaucratic mass that was very ineffective. War games and all this kind of stuff. So they release a new paper, about $1 trillion of spend they are expecting, but over 25 years, which I think is strange. Probably going a little bit faster might be, but whatever. I'm not a European lawmaker. We'll see what happens with that. I really would like to see some leadership change in Europe potentially to unlock some of the business capabilities of Europe. Unfortunately, life just is kind of like cycles like this, right? Where Europe really benefited, from a lot of different things, and they were able to implement a lot of the systems that they enjoy today. At some certain point, those systems can get lagged from weighed down by any number of things, and you kind of have to flip back, right? So we'll see if they can reduce some of the restrictions that they have on business, some of the regulation, and maybe we can unlock some interesting, European innovation. I would love to see that, and regardless, the spending is there for the military. And again, I know over 25 years, $1 trillion is like nothing. And in my opinion, I think that is kind of, that's very slow for whatever reason. But you still have Germany and France building it, right? So it'll be interesting to see what kind of happens with the Euro defense stocks. I do anticipate them breaking off, with things like AI and compute. They really, really need to do that for themselves. And I would love to see something like that. Of course, taking a look at Nebius, that being one of the big players that I think can benefit. You're 5.52% in Nebius. This is one of our loves on this show, and it has done quite well. Again, I am waiting for, kind of to see what happens with the mixed shelf offering, and if we get a major pullback. How this equity behaves, I think it's starting to get a little bit more institutional kind of attention, I guess. What it had done in the past is really comes up and then some news kind of comes out that you should anticipate with a company that is really growing like this, and then it has a very strong downdraft in it. That would be a beautiful time to get into Nebius. I like this company. I like the leadership. I think they are positioned now very well on their balance sheet is positioned very well. I think even with some further dilution, or let's say they get a line of credit somewhere, I think they're going to be okay. The demand is clearly there for this kind of stuff, right? I mean, even with like CoreWeave and everything. And I mean, again, CoreWeave is increasing CapEx in a major way, and they're defending it, saying this is what we need to give our, clients what they want. And that bodes well for things like Nebius. Big time. Folks, if you stay right there, we'll be right back. We'll talk a little bit more about this, talk about some data center equities that I'm very happy about. We're going to talk about those, so you stay right there, and we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Give me 1 second here. I want to pull up some numbers. We're talking about UNH today, but I just need a moment to see if I can get, there we go. Yeah, we'll talk about that. I wanted to get that set up, however. Okay, take a look right now. Nebius, this is huge. What's going on with Nebius? Why is this rallying right now? Okay, yes, of course, there is the industry they're mainly in, right, which is going to be like compute rent, supporting AI, all that kind of stuff. But they also have a lot of these smaller little companies. Of course, ClickHouse is massive, AV Ride is big as well. And a lot of those smaller companies that they have holdings in have been greatly appreciated in their valuation. And so that's getting some Nebius exposure there. Same with Tolokai as well, which I think could be a really interesting, Tolika, which could be a very interesting deal for Nebius. So this has been really phenomenal. I do anticipate somewhat of a pullback in this equity, just because it's just what it kind of tends to do, and I'm not seeing, and I'm not seeing it spoken about in such a big way. I think people are catching on, right? But when you're, early on, you see some of these equities that maybe not a lot of people are talking about, and you like them, you're just going to get ready for some really nice drafts to the upside, and then some really, earth-shaking movements to the downside. I don't think it'll be that extreme. You do have a gap that can potentially get filled. You do have earnings. I know it says it's on the 16th today, but it is per their website on the 20th. I do anticipate that they will have good forward guidance. I'm not sure we're profitable now. Of course, I think they're going to have to explain that we need more capital in some capacity. That could, of course, shake some people. Now, that would be a beautiful time if you get a downdraft in Nebius for them. Now, of course, that is considering that they are doing everything they said they were doing, and they're kind of on track for the ARR that they said they were. So, pretty solid stuff. I like Nebius, very interesting. We'll be following that much closer. Of course, it has treated us very well in the past. Looking right now at TSSI. Man, we were talking about it. Remember, guys, I like this stock. I'm holding on to it. It's dogged right now. But what I said is that at earnings, if this were in a different environment, that this stock would have skyrocketed. We've been holding TSSI for a long time now. This is some phenomenal movement. You're up 72% today. I am upset that I didn't see that they had earnings yesterday. 2 days ago, I didn't see that they had released the earnings, or were going to, or I would have added some nice calls to that for sure. Now, I didn't anticipate it to go this high, but this is strong. They are partnered with Dell. Okay, so they do a lot of the data center build out, and then they will be going to maintenance. So one of the tough things with TSSI right now And what I think is kind of the reason why this was suppressed for some, and again, I say suppressed. This company has moved over the past 2 years or something, right? But you can kind of see, you get these really big downdrafts in it, and it kind of continues, and we were very cheap for quite a while. I say years, I guess only the past year, really. Their margins as they stand now are a little bit thin. Now, the margins are thin on the construction, right? When they phase out of the construction, which, by the way, whatever, because you're gonna get massive, massive bills, and they'll get okay money from it, right? You're trading at 384 million market cap. PE is very high. We'll take a look at this. When they can transition over to the maintenance of these things, that's where you get some really cool earnings and growth with TSSI, right? So we'll be following this company. We will be following this company because I like this company a lot. This is some awesome movement. Of course, you can get some pullback from this level as people kind of digest everything going on. But very solid times for these data center builders for things like SMCI and TSSI. Give me a second here. Let me look up. Gosh, that is, yeah. Man, this thing went 94% to the upside earlier. That is nuts. Yeah, okay. Listen, let's just, revenue reaching 99 million, 523% increase year over year. Performance driven by significant growth in procurement, 90.2 million, up 676%. In systems integration, which is up 253%. My. Particularly from AI rack integration services. Excuse me. Net income rose to 3 million from 15,000. That is amazing we're doing that. Now again, I'm pretty tight margins here. That's for net income. I gotta see, give me a second. What is their actual margins? Give me one moment. Because in the past it was really tight. I wanna see if it's improved on this time around. Again, I'm kind of assuming it hasn't because this is what they've been just being very transparent about, that right now the margins are just kind of tight because of the nature of what they're doing. Let's see here. Yeah, and they're set up, their balance sheet's good. It's a nice amount of cash, 27 million in cash. Yeah, right. Okay, it's like 10% margins on that. We would like to see facilities management increase and then system integration increase as well. That would be, unfortunately, facilities management has contracted, year over year, but that will kind of increase as time goes on. Income from operations is balling. I mean, this is nice. Net income, up 2.9 million. And again, it's just that procurement has very tight margins. So this is awesome. Very, very nice movement to the upside for TSSI. Something we'll be following. One of the risks that I think is the most glaring with TSSI is they are really exposed to Dell. And kind of what Dell decides to do, that is their major client. I would like to see them try to take more, let's say, business from companies like SMCI. You're up 3.98% in SMCI today. I think TSSI is a better company, meaning, they kind of do different things, right? TSSI does do what SMCI is, which is that systems integration. I would like to see that grow a lot more for TSSI. I think they can do it by taking stuff away from SMCI. Mainly because SMCI has kind of been sketchy in the past. But the Data Vault partnership is massive for Supermicro. I don't know, maybe we email TSSI and be like, hey guys, try to figure out what they're doing and see if we can compete in any capacity. So, but a good day for all of these companies in this sector. Take a look at NVIDIA, you're up 2.9% right now. Excuse me, I don't know what the heck I'm reading. It's been a long week is what it is. We're up 0.3% in NVIDIA. So again, another fantastic movement to the upside. You're getting money from the Gulf Arabs to do this kind of stuff. We're looking at AIQ. You're at 0.34%. SPY is fantastic that we're seeing this kind of above now what we were seeing in the QQQ and the AIQs as well. So you're getting some nice kind of just buying everywhere, right? And I want to take a look at our buddy Rockwell, who we've been following. Look at this. This is just beautiful, beautiful equity. They are, I think, positioned. Are we like at all-time high? No, okay. Oh man, but you're getting close. You have 344 and 354 for all-time highs. Yeah, I like this company a lot too. I think the management has done a great job cutting costs. I think they're well positioned for automation, factory build out. Folks, if you sit right there, we're gonna take a look at a company that does LiDAR for self-driving. It's gonna be quite interesting. So you stay right there, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Almost halfway done with this episode. Take a look at the SPY. You're 0.56%, getting very close to 600. Composite trading up 0.44% at 19,194. You got the Qs up 0.36. Those AIQs up 0.37%. That is a Basil Chapman favorite. Dow Jones Industrial trading up 0.72% with those Russell futures up 0.91%. Where is the fear? Okay. Bitcoin. Woo! BITU, our holding, is doing quite well. Of course, you had a couple weird days, but that's all right. There's a digestion period that occurs. Trading up 0.63% at 104,150. Crude trading up 1.13%. Those are the futures there. Gold, again, unfortunately becoming that source of liquidity for a lot of this risk on. Now, it's nice we're holding at these kind of levels, but you can see it constantly wants to test even lower. We could be seeing 3,100 somewhat soon with this behavior. Copper trading off 2.05% at $4.58 for the future contract. Silver off 0.81%. Let us take a look at the 10 years. So you're coming down a little bit with that, 4.435. That was probably expected. I would assume, a lot of people were saying this is like an absolute bottom in. So, I mean, the TMF is up. Ugh. Man, this is just brutal, And yes, this is like, I guess you look at the charts this way, you're almost at a double bottom kind of deal here. I think people are still anticipating, a lot of debt to be added to this. It is nice to see you're coming off 4.43% in the 10-year. Okay, you're off basically about, like 60 basis points from the high, which, okay, not bad. Kind of be expected because of how fast it's moving up. And then your treasuries, trading 4.89%. Now that's not as big as a change. You're seeing at least a little bit of bond buying right now. I don't think it's kind of enough to establish like, okay, this is perfect. But you look at things like the TMF chart. Okay, this is going to be the TLT 3 times is leveraged ETF. You can see some kind of like bottoming patterns, right? And you usually get around that area, and then we kind of traverse to the upside. Okay, so it may not be a horrible thing. I think, this is maybe a way we can kind of look at it too. You're getting a lot of just capital flow into things like SPY, all these big indices. This does reach a saturation point at some point. Again, this is what we were kind of concerned about in December and January, right? Major run up to the upside, okay? And then you just kind of get saturated. But that's good for things if the risk on still exists. You will see things like Bitcoin. I'm sure bonds do probably catch a bid a little bit at that point. I don't think there is as much of a fear of sovereign risk right now. Who knows? You obviously are getting people selling off bonds, right? So that's there. But I wonder, because I'm not seeing it go places like gold, not seeing it necessarily affect things like the DXY, where we're at 101 right now, okay? Not a bunch of buying of other currencies, okay? What's the USD JPY at? You're up today in USD to yen. So, I think, a lot of this is probably going into things, like risk assets here. Additionally, you have things like the junk bonds, and yeah, you're flat today, but this is some nice movement to the upside with it as well. It kind of indicates like, hey, we're okay with taking that risk exposure. What else can we look at? Yeah, here, let's see. Even like the short years, like the 3-year treasury is getting sold off as well. Yeah, I'm not sure. This is very strange kind of behavior for sure. I don't think, however, it is indicative of the end of the world, right? I don't think that's the case. Of course, you do see bond yields come up as a bunch of people pump their money into the equity market. So I don't know. That's kind of where I'm at right now. I'm not seeing any sentiment that this is fake. Sure, you definitely get some kind of pullback here, especially we might even see it today. But this is because this has been a very strong march to the upside. Things again, I think what does make me a little bit nervous is some of these smaller smaller. We're going to talk about Tesla. That is not small, obviously. But on my personal account, I have a list of very speculative stocks, like basically meme stocks, and I'm seeing those really rally very heavily as well. Now that's okay. That can go on for a while. Of course, those get rug pulled very, very frequently. But it's just kind of saying, like, listen, there's not a lot of people who are scared right now that are leaning towards safety or anything. I mean, we take a look at that TLT to HYG ratio, and you're very low, okay? And that in and of itself could, of course, be some indication of, okay, man, maybe this is getting a little bit overheated to some extent, but in some ways it does kind of make sense as well, right? Some of the fears were assuaged. I still think there's a lot of uncertainty. The data hasn't been horrendous economics-wise, right? Labor market's still somewhat strong. Inflation is like okay. Again, I think we'll start seeing some more inflation as the months go on here, and that'll get adjusted. But I think right now this is very kind of risk on. Now that does not mean I'm buying leveraged Qs at these levels. Picking some equities that I think are fine, that maybe haven't rallied as strong, but I still think are good companies. We'll see what happens. Again, I am a little nervous at these kind of levels, at least from some kind of momentary pullback. Probably not 480s, and I think the government willing to spend more, okay, is again going to assuage some of those fears. One of the big things we're talking about, okay, is the fear of hitting that massive debt wall, and you can't do much, right, with reissuing. So I don't know. We'll see what happens with that. There is some strange kind of behavior coming out of like private credit that's trying to get Trump to allow retirement funds to buy that private debt. That's freaky, and that's, can totally be like passing a hot potato. It's just kind of hard to see what's going on there. It's very black boxed. They will reduce some of the regulation on banks. Okay, not horrible. Maybe you could just buy more bonds, is probably what they're looking for. But I mean, those regulations are there for a reason. Of course, we'll just have to see what that actually, if they're lowering the SLRs or you can buy more bonds or whatever, like, okay, fine, whatever. But, you start getting risky lending, which I don't know, is private equity doing risky lending? We don't really know. Folks, you stay right there, we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Okay, welcome back, everybody. Jacob Shoup, watching the Tom O'Brien Show. This is our last full segment here for the day. Take a look at the SPY. You're up 0.52% at 593.56. Composite up 0.35%. Q's at 0.29, AIQ at 0.26. Man, let's talk about the thing that I said we were going to talk about, and then I got sidetracked. Our robotics, okay? Up 15.54%. Okay, taking a look at 180 million market cap. What is our robotics? Why are we talking about it? These guys have earnings coming up on May 20th. There seems like there might be some potential for some decent attention for our robotics. What is our robotics? They create LiDAR for autonomous vehicles. Okay, so that is predominantly the method vehicles will use to understand what environment they're in. Of course, this is contrasted with what Tesla is doing, where they're just essentially thinking, like the car will take the sensors and it processes that visual data. So think about like echolocation. I mean, everything kind of is like echolocation, I guess. It's kind of weird. Not very creative, but long story short, they're different. Okay, this is a more standard way of doing things. Stuff like LiDAR has been around for a while. It's how you find weird little ruins in the jungles of the Amazon, if you're familiar with that, right? Where they're, hey, we found a new city in the jungle. They're using LiDAR, okay? Waymo uses LiDAR. A bunch of these new, AV Ride uses LiDAR. Everyone is really using LiDAR besides for Trump. Excuse me, besides for Musk. So, okay. LiDAR has gotten a lot cheaper as time has gone on, so I think that adoption will be nice. That was one of the arguments to be bullish on Tesla's style of full self-driving. Basically, that LiDAR is very expensive. It has become much cheaper. It's already in use, okay, like in Waymo. Our Robotics has partnered with NVIDIA to do NVIDIA Drive, which is going to bring AI and self-driving to vehicles. I think that potentially can be quite a nice run-up for our robotics. Let's take a look at what they got going on balance sheet-wise. And unfortunately, this is going to be their first quarter reporting. So we only have the 10K here. Taking a look, let's see here. Cash and cash equivalents should be at 13 million. You have total current assets at 57 million. Excuse me. You have total liabilities at, oh wow, that's weird. Okay, so total liabilities is going to be something roughly about 39 million. Total current liabilities, this can get weird, right, is at 36 million. Okay, so we're looking at current liabilities at 36 million with cash equivalents at 13 million. Okay, and you're looking at revenues of $768,000 last year. Yeah, kind of tough. Cost of revenues was pretty high at 1.5 million. So it's a tough company. Okay, no doubt. Tough sell. They are going to have to leverage that deal with NVIDIA. They're going to have to convince everyone. Their net loss hasn't really changed much over the, I mean, you know, actually I say that. It's about 6 million more from 2023 to 2024. They need to leverage this NVIDIA deal, okay? They need to say, hey, this LiDAR is the way to go. We need to see more deals being made to help some of these companies. get this technology. I am, of course, concerned in some capacity with things like EVs. It doesn't necessarily have to be an EV, but it will be with things like self-driving vehicles. What do we do about this? Okay, I think it's kind of tough for ARB Robotics right now. I'm not sure how much. It doesn't seem like they've made a ton of deals since posting the 10K. All right, this has historically traded very low. You have this massive pump up. Usually you lay, at a higher level after this kind of pump and dump. You've actually gone down much more. Okay, yeah, again, tough kind of gap down on earnings. I'm not sure how this will bode for them. Let's see how much they're using in cash. Oh man, yeah, they use 32 million in cash. Excuse me, they lose 32 million from operations, excuse me. Okay, but okay, this is solid. So from net cash used in operating activities is 32 million. They were able to have a net cash positive due to what seems like proceeds from issuance of ordinary shares and warrants. Okay, so dilution then. So yeah, this will be kind of strange, right? So of course they're trading after announcing the debut of its LRR 615 imaging radar in China, so they are expanding out. This probably is going to require a little bit of a deeper look. Of course, a lot of what I'm going over, unless it takes the entire show, is going to be just the initial kind of information. And it's always important to look a little bit more into that. But we'll see what happens. I mean, the contraction in revenue is really tough for them, and it's consistently occurred. I think the partnership with NVIDIA is positive, and this was this was after the reporting period for the 10K, so that's positive, right? Let me actually see, and again, that's NVIDIA Drive. Okay, so that's from January 6th, Israeli company. Israelis have a lot of interesting little tech startups as well. AI-powered processing, exceptionally dense, high-resolution point cloud, perception radar, Collaboration. So ARB's high-resolution radar integrates the NVIDIA Drive AGX in vehicle computing platform to revolutionize radar. Yeah, but where does it get pitched to, and where does the money come from for this right now? And is that too far away? How do they get more money to kind of float operations here, right? If they're spending a ton and they're using more cash. They have. Yeah, it seems like a tough one. It's probably why this company is, and I mean, 182 million. Whew. It's not horrible, right? But this is a lot of optimism, considering what's been going on with their earnings. So, yeah, that's what I have. You have a bunch of movement to the upside. I think probably in anticipation of their earnings. Maybe somebody knows something or whatever it might be. But it seems pretty priced pretty well given the information that we have. And again, I think the adoption will be there. I'm not sure entirely what the drive. Okay, so let's take a look here. Let's look at NVIDIA Drive partner ecosystems for cars, trucks, robotaxis, etc. Okay, well, they have a lot of people. They're saying, okay, so featured partners. Okay. General Motors, Toyota, Mercedes-Benz, like Jaguar, Volvo, Rivian, that's weird. Hyundai Motor Group. But I'm under the impression that I know Hyundai is also working with Nebius. So I'm not sure to what extent, these kind of deals are using things like ARB Robotics. This is one portion of this whole NVIDIA Drive concept. Folks, stay right there, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. This is our last segment here for the day. Yeah, I'm trying to find like anything NVIDIA is saying about it. I mean, essentially what's going on is they're integrating our robotics resolution sensor into the Drive and Omniverse platforms. I want them to talk more about it on their website, but I'm not seeing them mentioning R, but whatever. That's still very positive, right? So, I mean, NVIDIA, you know, it's going to have a lot of customers for that. Anyways, that's our robotics. Keep that on your list just to watch, if anything. Take a look at the SPY up 0.61%, composite up 0.48. Okay, wait, hold on. UNH here. Talk about it. You're up 5.98%. Man, yeah, some nice movement to the upside today. A lot of sad things with this company. Of course, hacked in a major way, one of the largest enterprise hacks of all time. You know, you lose your CEO, you miss earnings, no foregons. What can we at least look at now? The free cash flow, at least from the periods that we know, is historically enough, okay, to pay these dividends, which is a lot of what this company is. I think they have some issues. They have some very thin margins. They basically brought on a lot of new clients that I guess they didn't, you know, do proper underwriting on, and they demanded a lot more money than they had anticipated. However, what I will say is that it does seem like it's not a reason necessarily to buy anything, but can add to, you know, whatever. Let's say you're bearish or bullish. Looking at the Form 4s, you have some very big executives there buying at market prices. So you have about 1,533 bought at 320 from Timothy Flynn. Okay. You have 3,700 at 271 from Kristen Gill. And then John Noseworthy bought 300 at 312. Folks, thank you so much for joining me. I appreciate you all so much. I hope you all have a fantastic weekend. Tommy will be on at 9 a.m. In the morning for the morning market kickoff on Monday. Take care, folks.